Fuck it. All right, cool. We're recording it now. Fantastic. Okay, I'm recording it, bro. You guys don't have to worry about it, man. Yeah, cool. So yeah, you saw. Look, there was even a daily bearish engulfing. But why am I not looking for buys? Because I'm at an area of, this is what ICT teaches you, PD arrays, your premiums and your discounts. This is an area of discount. This is your area of premium. So when price is in this area, I want to be looking more towards signs of strength. And it also backs it up, excuse me. And it also backs up my theory of price going higher, gets backed up when I see this weekly breaker structure to the upside. I hope you guys see that structure, bearish structure. People want to sell the bitch, but then price breaks right above it, right? So it's just a whole lot of support. And again, this works. Price is fractal. It works everywhere, bro. Is this not the last down candle? Pay attention. Is this not the last down candle before price breaks out of the structure? There was no other down candles after this one, right? It's just up. Is this not the last down candle before price breaks out of this this range? This range is going from here all the way down to here. Price breaks out of this range, which was the down candle right here, bro. So if I were to draw a zone, and again, because I'm on the weekly, right? So I just want to draw like from the bodies. Is this not where price gets rejected off of? Now what I can do, I can go down to the daily. This is exactly what I did. I went down to the daily. I'm like, okay, I can start refining this whole weekly bullish order block. I can start refining it. I can go over here. I can create a little backup down here. If this one doesn't want to hold, I can always rely on this. Fantastic. And so once I see that sign of strength, I'm buying it. That's it. And now take a look at where you could have entered from. Now is where you can use what I said about, you know, your engulfings and stuff like that, right? So you see your sign of strength. Fantastic. Price comes back down. Why would you not buy here? You could. If you get a confirmation, you could. As you can see, price flew up. You could. But if this fails, you know that it's not that your setup failed. It's just that you bought at the wrong area, and that happens. I can't tell you if price is going to 100% completely fly after this breaker. I can't tell you that this bullish order block is going to hold. All I can tell you is to follow the rules of your trading plan. If you wish to follow my standard operating procedures, so be it. If you think this is bullshit and you want to follow your own thing, that's perfectly 100% cool. I'm just here to share my stuff. So what I see over here is price. Yeah, sure. Price could have played off of this area. And in fact, it did. It did play out temporarily. And then it got pushed back down. But I know over here is where I really want to get in. This is my origin. Why is it the origin? The origin of where this price broke out of. This is the breaker block. The area that it broke out of structures right here. This is my breaker block. Okay. So coming back to where price is at right now. And why am I looking for bears? So why the hell am I looking for bears when, you know, on the daily perspective, we just showed strength, right? I proved everything about strength. Why am I looking for bears? Simple. When I go over to the 4-hour chart, don't I see a raid of these highs? I see a raid, number one. I mean, this high right here could have raided this as well. But why is this little wick over here not significant to me? Because price never showed weakness. How does it show weakness? By breaking the structure to the downside. Now, why is it that this, I'll answer that in just a second. Why is it that this raid is important to me? Why? Because when price raided this high right here, price raided it, right? Stop hunted it. What happens next? I get my sign of weakness, bro. It breaks structure to the downside. Now, when price pulls back up into this bearish engulfing, take a look at what happens. You're done. That's it. And of course, you want to look for lower time frame rejections and stuff like that, obviously, too. Inefficiency, bro. It rated the inefficiency. Yeah, I agree 100%, man. And if you're taking a look at this right here, exactly what Az was just saying, is this not an inefficiency / fair value gap, right? Bearish engulfing candlestick. Another thing that I fucking love about engulfings, bro. 80% of the freaking time they come with FVGs and what do you call that? Inefficiencies. Take a look at this bearish engulfing right here. All right, cool, done. Is this not a fair value gap? This is a fair value gap from this wick all the way up to this wick. You're done. That's it. Let me check. Let me take a look. I love it, man. That's where I make money. Facts, bro. That's what it is, bro. So exactly, man. So another thing, remember, I want to keep emphasizing this. It makes me so freaking excited when I say this because it works religiously, right? I'm not saying it works all the time. I'm saying that when you see these patterns, there's such a high probability that it works, that it's just, why aren't you taking it? You know? So remember what I told you guys about a zone is a zone, right? So this is nothing more than a zone. It's just a bearish engulfing zone. It's a bearish order block. Price can come in here. It can just completely disrespect it and fly up. Cool. But what do we see here? Is this not a raid of these highs? These are highs, right? Do we get a raid of it? Yes, we do. Why is it significant to me? Because guess what? Market showed a sign of weakness. This is bullish structure. Price showed a sign of weakness. It had a candle body close right below. Beautiful. What does that mean? That means that there's a high chance that when price trades back into this area, price is going to completely fall. Now it's up to you. Price could not trade back into this area. As you can see over here, you would have missed out if you want a price to trade back into this area, because you have yourself a bearish engulfing candlestick over here. And again, I'll show you guys how and why you should have gotten a sell into this. Okay. You see a bearish order block here. Price played off of here perfectly. Price played off of here perfectly. And one sec, let me answer these. It comes back for the inefficiency. Yeah. FVG coupled with OB is money. That's facts. That's facts, bro. That's facts. That's what it is. Because this is how it acts. This is your pocket of liquidity. An FVG or an inefficiency is your pocket of liquidity. It is caused because the market moved too rapidly that the price was not able to fill in the appropriate orders. So what happens when price is not able to fill in the appropriate orders? Price comes back to fill in the appropriate orders. What happens then? That is the equivalent of a raid into your bearish order block. Why is that the equivalent of a raid into your bearish order block? What's a raid? A raid is nothing more than a liquidity run. You're running for liquidity. The market wants money, right? If an FVG holds liquidity, doesn't that mean that it holds money? If price runs that FVG, gets the money out of that pocket, out of that little pocket of liquidity, gets the money, and then goes inside of your bearish engulfing or your bearish order block, that is your typical raid into OB sell or raid into OB buy, depending on your market situation. Sterling would drop this week. I bet, bro. I'm on a sell for GBP. 100% I'm on a sell. I mean, I'm not on it right now, but I'm looking for sells. I'm hunting sells right now, 100%. So again, take a look at this. A zone is nothing more than a zone. I'm not entering any sells right there. Me personally, I'm not entering any sells right there. Why? I want to see my sign of weakness. What's my sign of weakness? Raid. Okay, we raid. So what? Price can come back in here and trade higher, but it doesn't. It shows me a sign of weakness. What do I do next? Price comes back up. I would have missed this trade. No biggie. No worries. Guess what? It gives me another example, another option for me to trade right here. You're bearish engulfing. Yeah, sure, it's a big zone, but let me show you, you can always refine it. 100%. You can always refine your zone. Now, again, take a look at this. If the market didn't print this side, take a look at this zone I drawn. Forget everything I said about this higher zone. Take a look at this. Is this not a bearish engulfing? So a bearish order block, facts, but then there's an FVG right below it. So that's an FVG, a pocket of money. You're raiding all of that money into your bearish order block. Boom. That's your drop, right? Not this one, because price doesn't actually hit. Take a look at this one. It does. So for me, and another thing I wanted to point out, right? Do you not see this? I want to show you guys the charts on a higher time frame, because you're not always going to have the ideal setups. Is this not a raid? Take a look at this raid. This is a raid. Why is it an important raid? This is also a raid too, but why is this one not significant? I never saw a sign of weakness. When I take a look at this raid right here, do I see this level of structure? Is this not structure? Price came inside, gets quote unquote supported up. Okay. Is this not my break of structure? What does that signify though? That signifies a sign of weakness. And so what happens is I'm looking at the last, in this case, up candle that caused the sign of weakness. Do I get that? I get my trade. Oh man, it misses. No worries. Price finally does come back up here. And then it shoots down, right? So again, why is this raid important? Because it happened in the daily bearish order block. Where was the daily bearish order block? Right here. This entire thing is your daily bearish order block. And so it's happening inside there. Mitigation occurred inside that. What is mitigation? The run on stops. These highs right here, it ran it with this long ass candle right here. It ran it. Broke structures signifying, I'm not talking about this structure. I'm talking about this one right here, signifying weakness, right? Price comes back to trade in it and it falls. What's your question, man? Chat. Okay. Came back on the 9th of July. FVG was not filled. It will come back, then drop. Watch. Okay, 9th of July. Let's check it out, man. You could 100% be correct or you could be wrong. It's cool. On the 9th of July. Where's 9th at, bro? Right here. Facts. This is the FVG right here. Get rid of this. Get rid of this too. Okay, what did you say, man? 9th of July? FVG was not filled. If I were to take a look at this, bro, is the FVG not filled, man? Because you have your pocket of liquidity. Hold on. You have your pocket of liquidity from this wick to this wick, right? And so everything inside of that, that's what you call a fair value gap. And so does it not get filled by these highs right here? In fact, you get the fill exactly of a 50%. So if you would have taken your snipe right here, that would have been absolutely beautiful. Unless I got what you were saying was wrong. Oh, okay, no, you're right, bro. It did come back to fill it. It's just that I don't think it's gonna come back after this to fill it. What I think is gonna happen. Now let's talk about what I think is gonna happen. What I speculate to happen. Do you guys see this? All right, pay attention to this real quick, using the same old concepts that I've been talking to you guys about for these 2 sessions. Is this not your bearish order block? 100% it is. If you say it's not, leave the freaking session, bro. I've been talking about this for the last hour. Okay, is this not your high? This is your high. It did not reach your area of interest. Did this not raid your highs? Yes, it 100% did. Do we get a sign of weakness? That's up to you whether you want to use lower time frames or not. To me, because we're dealing with the H4. If I'm dealing with the daily, then more often than not, again, it's up to your discretion. More often than not, I'm going to look for a H4 breaks of structure. If I'm dealing with the H4, more often than not, I'm going to be looking for H1 breaks of structure. So once I raid this, let's take a look at the H1, right? Once I raid this, was the H4 bearish engulfing on H4, right? I raid this high into my H4 bearish engulfing. Beautiful. I create structure. Structure gets broken, which is my sign of weakness. Now, if you wanted to use an OTE, right? I'll explain the concept of why I would say a safe stop loss would be above this area. Let me explain the concept why in a second, okay? If I were to use my OTE, my fibs, down to this low, you can see how your sweet spot, which is your 70% or your 79% snipe area, is perfectly lining up with your daily bearish, or excuse me, with your H1 bearish order block. Right? Now, your entire range of where you want to be interested in shorts from is going to be from your 62% up to your 79%, right? But the areas where I pay most attention to from my own trading experience, and I could be wrong in your aspect, and that's cool, but for me, it's worked. I pay more attention to the 70% and the 79%. So on my MT4, I have this label as my OTE, my optimum trade entry. This is my 79%. If price reaches up here and there's an order block, which there is, bro, I'm trying to get in. Stops where? Stop above this high. Why? Why do I want to place my stops above this high? Why do I have so much confidence that these highs are not going to get ran? Let me explain why. Don't you think that if you were a retail trader learning off of Trader Nick right now, you would do a little, oh, this is my resistance zone, buddy. I'm going to sell from here. But you would have gotten stopped out, right? So what does that mean? All of the liquidity from here has moved over here by the smart money. The smart money now has the liquidity up here. So all of that, all of your buy stops, all of your stop losses are now above here. No longer above here because they got triggered. They done got triggered. So where's the next area of liquidity? Up here. Where's the next layer of liquidity? Liquidity up here. Now, I'm paying attention to this because I believe, out of just looking at the charts, after it rated these highs, the money is protected up here. Just like how the money is protected up here. Why is the money protected up here? Because it rated these highs, did it not? It rated these highs and then immediately broke structure afterwards. So the money's protected up here. Just like this, okay, right here, if I were to just look at this portion of the chart, the liquidity from these equal highs right here, relative equal highs, are protected up here. But you always have to use your multi-time frames. Why the heck would you want to sell when you have a bearish order block demanding price right up here? It acts as a magnet, bro. Take a look at where this fucking price traded to, man. Right to this inefficiency. You see this inefficiency? 50%? Take my 50%. Boom. Snipe the bitch. You're done. Price would have flown down. So now, since let's say you didn't take that trade, that's perfectly cool. Now, how could you get into the market? Well, for me, I took my fibs. I showed you guys. So I took my fibs. 79%. I'm marking out my order block right here. That would be 1. And 62, 70%, I know I can see my engulfing here. I'm going to use my discretion. There's a fresh bearish engulfing here on the H1, which is AKA a bearish order block, which is AKA a bearish QM. Okay? And now take a look. I'm going to have one area that I could potentially short from. I don't know whether price is going to come up here or price is going to go lower. I don't know. I'm acting on what I see. And what I see is price could trade up here. Sure. Sure it can. This could act as my little high. Price could raid this high, go inside here and then sell off. Could happen. Or price could just simply trade off of this. Remember what I told you about engulfings, the beauty about engulfings, fam. Got your little FVG. Got your little sly FVG / inefficiency right here. Take that money, get inside the sell zone, shoot down. Why do I have so much priority on the sell zone? Because it's proven weak, excuse me. How is it proven weak? Because it broke this level of structure. Weak in the form of it's ready to go down. Strong in the sense of it's ready to go up. This week we're making money. Yeah, bro. I'm catching GJ this week, bro. If I get stopped out of this one, there's no worry. I'm taking my last resort over here. I'm gonna use probably a slightly lower risk model for this one. Yeah, slightly lower risk, maybe, I don't know, 1% of my account or less than 1%. Maybe this one I'll go 1.5 to 2% of my account because I have a lot more confidence in this area right here. Me personally, that is. So where would I want to short it to though? Okay, cool. You're shorting from all these areas. Where do you want to short it to? There's no point. What if I just short it here and I take my profits like freaking here or here or something? Then there's no point. Okay, let me show you guys where we'd short it to. Now, this is something that Fern thought on the offshore chat. So this is about low resistance liquidity. What the heck is low resistance liquidity, bro? So if I were to take a look at structures right here, as I told you, I pay attention to the most recent area of structure. This is the most recent area of structure. It gets broken. I'm paying attention right here. This is the low that created that break of structure. So I can do this right now. Beautiful. Done. Okay, cool. This would be my low resistance liquidity. Really would be right here. This was the last move. In fact, I'm going to move it down here. Let me explain why in a second. It's because this was the area that started this huge push up, right? Price started this huge push up over here, traded back. Now, where did the next start come from? The next start came up from here. So all of the people who bought here expecting price to go higher and higher and higher, where would their stops be? Their stops would be below this area. Some people missed this trade. No worries. They take their buy over here. Where would their stop losses be? Below this wick. Where would their stop losses be for this one? Below this wick. And so on and so forth. What does low resistance liquidity mean? Well, the easiest way I can put it into words for you guys would be by taking a look at a low. All right. While taking a look at the low. All right. And then you want to look at structure right now. What's structure right now? Structure is in a bearish flow. Why is it in a bearish flow? Well, we hit a bearish order block. Price is proven weak. Where has price proven weak? By this bearish break of structure. Cool. So does that mean we're in bearish structure? Me personally, yes, we are in bearish structure. We hit a bearish order block. We've proven weak out of that bearish order block. So now, before I look for buys, I want to look for a sign of strength. Do I get a sign of strength? Do I get a break out of any of these highs? I don't get a break out of any of these highs. So price is still in a bearish freaking order flow. Fantastic. So for me, I'm looking at this low. Price comes down, trades there, doesn't take the stop losses. Price goes up, comes back down, doesn't take the stop losses. Price comes down, doesn't take the stop losses. Price comes back down here, doesn't take the stop losses out of how many? Take a look at this. You have stop losses from here. Look at my cursor. Stop losses here, completely untouched. Stop losses here, stop losses here, stop losses here. This is what ICT calls a liquidity pool. Why? Because it's a pool of liquidity. All your stop losses are underneath this area. Yes, there are stop losses above this area too, but why are they significant when you have bearish structure? Structure first, liquidity number two. What's structure? Structure is bearish. I've already told you guys why. Bearish order block on the left, proven weak by a bearish BMS. Number three, you have yourself retracement, and then there's no break out of these highs. If I get a break out of these highs, then I'm going to follow what I see on the higher time frame. What do I see on the higher time frame? I showed you guys earlier on the weekly. Use your memory. On the weekly, I showed you guys that we were in bullish structure. Sure. But I'm taking a look at, we're not trading by the weekly. I'm trading intra. I'm trading 2-3 days. I hold my position tops, max. Not even that, man. Just like 1-2 days. That's it. So yeah, this is my liquidity pool. Stops below here. All these sell stops, stop losses for the buys. All of that stuff's below this area, man. So I'm looking to target this. So if I were to sell from here, I'm keeping my stop loss where though? Where am I keeping my stop loss? Well, me personally, I'm keeping my stop loss above this high. Right? Because as I told you, it's every single engulfing is a QM, depending on what type of engulfing it is. Bearish engulfing, bearish QM. Simple as that. Am I not right though? This is my bearish engulfing candlestick on the H1. Is this not a stop hunt? Structure below, break out of structure right here. It was late, no doubt. It was a break out of structure nonetheless though, right? Break out of this structure. Okay. That's what I mean. Every single engulfing is bearish QM, or every single engulfing is a bullish QM, depending on what type of engulfing it is. So what I'd like to see would be for price to trade lower after touching these, after touching this bearish order block. But what price could do instead, because now I'm looking at it, I'm like, damn, this looks like I could be retailed if I were to sell from here. Why do I say that? Because is this not a high? So why couldn't price take the liquidity from these highs, from this high, this little wick over here, this is a high, into the ultimate bearish order block, to then sell with a much better risk to reward ratio? Because instead of taking pips, instead of taking my entry from here, down here, for example, I'm taking my entry instead now from up here. That's way more. Look, 80 pips profit, right? If instead of taking it from here, 50 pips profit, 60 pips profit. Like if I wanted to risk more, if I ever wanted to risk more with my account, I'd risk more up here as opposed to over here, because I know that there's still the agenda. The agenda could come up to rate these highs, could possibly. So this session's about to end. I'm going to go over a very brief, because Baby Trader asked me to analyze. Hopefully he's still in this thing. Hopefully he's not freaking bored of me, man. He's not, but it's cool. I'm still going to analyze AUD USD real quick. So with AU, man, what I'm looking at, where is it at, buddy? Oh, there we are. Hold on. Chat over here. Awesome stuff. Thanks, bud. Yeah, bro. Send your chat to the group, man. Thank you so much. Thank you so much, guys. But real quick, okay. So what am I seeing right here, right? I'm seeing mitigation of these highs. I want to go over this real quick. You see this high? Does it not get mitigated? Yes, it does. What does that mean? Liquidity is over here, right? Why do I have so much confidence that the price is not going to come up here? Why do I have so much confidence? Because we liquidated all of these highs and we broke structure, bro. Take a look at H4, by the way. Take a look at H4. And we broke structure down. So look, all the liquidity from here. Oh, buddy. All the liquidity from that high and this high. Look at this. High number one. Pay attention. High number two gets liquidated. And now where's the next area of liquidity? Ask yourself. The next layer of liquidity, most recent high. Am I right? Awesome, man. Thank you so much, bud. All right. Next layer of liquidity up at this high. Beautiful, right? So are we in bearish order flow? Me? Yes, we are in bearish order flow from a higher time frame perspective. Why? Number one, we're at premium. Take a look at your weekly chart. We are at premium. How do I classify premium? You're a little freaking bearish engulfing, bro. I mean, it's the easiest to look at. Premium is not only a bearish engulfing or a bullish engulfing, bro. Premium is wherever price is expensive at. That's the easiest way I could put it. Wherever price is expensive at. But because I have my knowledge about engulfing candlesticks and how they work, I know the ins and outs of it. Not too much. I know a decent amount out of it. I know that when I look at a bearish engulfing candlestick, my mind instantly goes to premium for whatever time frame that may be. And if it's on the weekly, it's the premium for the weekly, right? Price can still trade higher on the daily and the H4 because it's just correcting price for the big move. If you're bearish on a higher time frame, any buy you take on a lower time frame, short-term intraday or short-term swings for a big move in the future, which will be against you. So you can, of course, take short-term buys in a bearish order flow on a weekly, 100%. Otherwise, you're going to be missing tons and tons of trades where you instead could be making a heck load of money on. So if I were to take a look at this, right, I get a little break of structure here. I'm seeing some weakness. I'm seeing some weakness here too. Look, I'm talking about this, by the way, this little break of structure. I'm seeing a break of structure here. I can see a break of structure here too, but why wouldn't I want to sell here? Ask yourself this: where's your area of liquidity? Is it above here or is it above here? For me, it's above here. They didn't get taken. These highs did not get taken. Ask yourself this question: if I were to have the chart like this, right? And by the way, this is what you call consolidation, contraction, right? I still can trade. Take a look. Why? Is this where your liquidity is? So price hasn't printed, okay? This is where your liquidity is, right? Price is going. Price didn't get taken. So there's liquidity here too, right? Boom. Price takes this liquidity. What happens next though? Break a structure down, right? See this break a structure down? I want to find out the last bullish candle that caused the break of structure. Am I right? Cool. We got that right here. Okay. Stop loss where? Above the mitigation. Why? Because all the stops from 1 and 2 and 3 and 4 and 5 are all resting above this. Absolute beauty right here. Okay. So I know that if stops get taken out of here, we're going bullish. We're going bullish at least on an intraday time frame. We're going bullish. So when I mark this out, take a look at what happens. We took the stops from all of these previous highs. We've proven weak out of all the money we've taken. We've proven weak. Price comes back up to trade from the area where price proved me weak at, which is this last bullish candle before the breakdown. Boom. Shoots all the way down. Guess what? Again, low resistance liquidity. Where's that at? I have liquidity here. Does it get touched by this? No, it doesn't. Does it get touched by this? Look at this. Pay attention to these lows. It doesn't get touched by this. Does it get touched by this low? No, it doesn't. So I have liquidity all down here, bro. So when I sell over here, boom, take a look at this wick. Grabs it all. And then guess what happens right after that, bro? Boom, you fly. That's exactly how this whole thing works. The market revolves around structure and liquidity every time. If there's liquidity at a certain area, best believe the larger agenda is going to switch its structure. And I've seen this occur time and time again. It's going to switch its structure to be in the direction of that liquidity. If there's liquidity right here, oh, look, it's a break of structure to the upside. When price comes back down, I'm going to buy. Oh, yeah, I bought it. Boom, you get fucked up, right? Because the larger agenda is saying there's all that liquidity down here, right? Furthermore, taking a look at your left, you're in bearish structure. Just from the H4 perspective, I showed you guys how it rated the previous highs on the weekly and broke down right here, proving weak. So all of the stop losses are protected by this one large ass wick right here. Beautiful. So what am I looking at? Okay, let me answer the question right now. 4 minutes left. I'm looking at this, man. Using the same old thing I thought you guys. High number 1, 2, 3, 4. Stop hunted, proven weak. Beautiful. I want price. Okay, let me go back one more time. High 1, 2, 3, 4. Stop hunted. Who cares? You can still go up, but it doesn't. It breaks down, proves weak. What am I paying attention to? What was the last bullish move before this breakdown? Do you not see a bearish engulfing candlestick? AKA the last bullish move, your little doji or maru, I don't even know what the fuck that shit is, bro, but your little last bullish move before the breakdown. I see that. I'm marking this bitch. Now guess what happens next? I'm seeing these highs get engineered. The market, what engineered liquidity means is that the market is putting these highs here. Why? Why is the market putting these highs here? Because it knows that the retail traders want to sell off of these areas of resistance so that the smart money can say, okay, let's go down, boom, shoot your ass up, hit your stop loss, take the liquidity out of these highs, come into where us, the institutional traders, want to sell from with our stop losses above this mitigation area right here. Okay, we have our stop losses above there. Why? It's saving all of that money, all that bank out of saving is putting it in a little bank. Where's that bank at? Right up here. And it wants to save that. Break structure down. Price comes up here. What do I want to see? You can either straight away sell it off with your stop loss above, or what I'd like to see, I like to go down to the 5 minute, right? And I like to look for a bearish QM. So when price comes up here, I like to look for a little 1, 2, 3. See that structure that created number 3? I want to see a little break of that. And I want to pay attention to what the last bullish move was before that little break of structure. And when price comes back, boom, I'm attacking. Instead of having my stop loss, oh, my bad. Instead of having my stop loss above this line, I want to have my stop loss above this area right here. Because what happens on a higher time frame, which guess what? You have yourself your high. Let me go back to a 1 hour, man. It's crazy how this shit's just fractal. It happens every single time frame, bro. You just got to look for it. Is this not your bearish QM, man? Stop hunt, break a market structure. Now you still haven't gotten your RTO, your return to the origin. You still haven't gotten that. So that's what I'm trying to attack. I'm trying to get that return back here, right? But I'm just teaching you guys how to get it more precise. When it comes back over here, you could, if it's fine with your trading plan, you could just sell it off right here. No worries. I personally prefer to see an M5 bearish QM inside of this H1 bearish QM. You get me? So yeah, that's just it for AU. Where am I going to be placing my take profit? Simple, man, simple. What am I looking for? Little low resistance liquidity, right? So if I'm taking a look at low resistance liquidity, I want to see this structure. What broke it? I'm seeing this right here that broke it. It mitigated all of these lows, broke it up. Price comes down, doesn't touch it. Price comes down over here. It's far. So I know that there's liquidity here. Beautiful, beautiful. Now I know it's something else. Let me answer this question because time's running out, bro. What's low resistance liquidity run, man? I just went over it. How about I start a new session? For those of you guys who are late, I'll start a new session right after this one, and I'll just revise everything that I went over. I'm not going to go over low resistance liquidity right now. Is that cool? Hopefully, man. Hopefully you guys are cool with that, all right? So this is your low resistance liquidity. Why? You have your low that breaks structure, price comes down. It just sort of teases it right there. Doesn't actually hit it. Okay, let's take a look at this one though. What was the last bearish candle before the break of structure? This one. I consider this my low. This little wick right here. Price never comes down to mitigate it. It comes close, but it never comes down to mitigate it. Price goes up, comes down, never mitigates this one. So my whole LP, boom, right here. First take profit, boom, right here. Second take profit, most definitely 100%. No question, right here. Beautiful, that's it. And you want to know large term perspective? Right here. Why? Why though? This was the last bearish candlestick before a break of structure. See this bearish candlestick, last bearish candlestick before a break of structure. Price comes down, doesn't touch it, comes down, doesn't touch it, comes down, doesn't touch it, comes down here, still doesn't touch this little low right here, still doesn't touch it. This would be my higher time frame liquidity. So on a higher time frame perspective, I want to see a nice, beautiful drop down. It may not happen all in one move. I could be 100% wrong about every single bit of information I just gave out, but that's just it for this session, man. It's going to end. So I hope you guys appreciate it, and I'll start a new one, man. So yeah, see you guys soon.